Yo, there we go. So, what's up for everyone on the replay? Hope you're having a great day. Let me start this out with a quick portfolio update and then share with you the new stock I just bought today for the first time ever. I've never previously owned the stock. I bought the stock at an all-time high, and well, I'll just get to that in a second. I haven't even really looked at my portfolio today. So, let's see how the market's doing. Our main Moomoo portfolio is down 0.84% on the day. Here is our Robinhood portfolio. This is known as our dividend-only portfolio, where every stock in here is also in the S&P 500, but every stock in here pays a dividend. It's a pretty red day. I mean, we're down 0.97% on the day in the S&P. Dang, we're starting to rotate down a little bit in the market. Dang, look at that. We were trending up for a little while, but it looks like we're having a bit more red. Of course, Apple's green. Apple's really being rewarded right now for not spending so much on AI. What's crazy is I don't think we're in a bubble. I really think the market could go up another leg because when I look at the valuations of a lot of these mega caps, I'll tell you, I can easily Nvidia is a $250 stock. You can easily justify that from their multiple. I'm not saying it's going to go there just from the whole circular, but like Google's a fair valuation. Microsoft, dude, like 32 PE, Amazon 30 PE, Meta, you could justify $1,000 stock price on them. Like all these stocks, like mega caps, are a pretty fair valuation. So yeah, that's our portfolio. Let me show you the new stock I just bought for the first time ever. What up, Tommy? What up, Looney? And I do have some bad news today. I changed my real estate place. So I might look into buying Iron. I'm actually thinking of buying Iron Mountain in this portfolio right here, but I actually sold Iron Mountain and I deposited a couple $100 to buy 3 shares of Cavco stock. If you're wondering what is Cavco, they basically, to keep it simple, make these manufactured homes, these quality, affordable manufactured homes. And it's basically their solution to the housing shortage in the US. This company has no debt whatsoever. Their average net revenue per home sold is $99,000. They make these really nice homes. They literally have no debt whatsoever, 21 forward PE on them. So that's actually why I picked up 3 shares of Cavco, even though the stock is at an all-time high. So let me share with you a bit of their financials. Then we'll look at some of y'all stocks right here. What up? Well, what up, Vicky? We'll look at NVTS. We'll look at IRM. I'm really thinking of, I'm actually about to buy Iron Mountain here in my Weeble portfolio because I still want that stock so bad. But check this out on Cavco. They have amazing, like, look at the EPS, which is just net income per share. Look at the growth year over year, 25, 50, 10. They're doing $6 of EPS a quarter. They don't pay a dividend. Look at the free cash flow per share. It was $10 in the most recent quarter. And the best part about this company is actually the share buybacks because, again, they have literally no debt whatsoever. But look at the shares. There's 7.99 million shares. Like there used to be like in just 2022, there was 9.28 million in 2022. Now there's only 7.9 million. So anyway, they're doing monster share buybacks, unleveraged balance sheet. And I like the business model. So I didn't mind buying them. In a 21 forward PE, I like their market cap. They're worth $4.6 billion. I feel that's a pretty fair market cap. They also have a backlog, $200 million backlog. They have great margins. Anywho, let me close out of that. That was it. I made that little post on my Discord there. So let's look at some of y'all stocks here. Someone said, hey, what up, Bertil? Someone said Meta stock. Yo, let's actually go over Meta real quick. I really think this, if you have the intention to never sell Meta, I really think it's worth buying even right now, or at least start your dollar cost average. Don't full size position it, but start the dollar cost average at current valuations. The forward PE is legit a 21. Like why am I looking at the forward PE? Because if you look at the right now PE, which is just the EPS multiple, it says it was only $1, down 82% this quarter. Well, this was a one-time adjustment based off the big beautiful bill, one-time tax charge of $15 billion. And we can tell that because if we go to the operating profit, that excludes that one-time adjustment, it was a record Q3, 20 billion, record sales of 50 billion for the first time ever, record cash flow. But one thing investors are questioning on Meta is how much they're spending on AI. Check this out. Literally $20 to $25 billion every quarter for the past 4 quarters. So that's literally like all their free cash flow and all their net income is straight into AI investments. And they just now they have a net debt position for the first time ever with this Prometheus data center bond with Blue Owl. So I honestly thought aside, they can easily afford these investments. I'm a shareholder of Meta, so I'm totally biased. Let me show you that real quick. We're not doing too hot on our shares. Well, hey, I mean, we're up 21%. Actually, look at the current price. It's $640. I bought one, I think, higher than that, $644. See, I bought a share. I really think this price is fair on Meta. So again, not financial advice there, nothing in this is. But hey, what up? Let's do SoFi. He said, should I wait or buy the dip? Honestly, Yeah, hey, Tommy, I did, but I'm about to buy it in this portfolio though. So don't be surprised if in a week from now I'm gonna have Iron Mountain back in my portfolio. So check out NVTS right here. This is Navita Semiconductor. I actually don't love this name just because they don't have good financials. The stock is actually being propped up on Nvidia, basically saving the company from bankruptcy. And basically, if we look at their right now numbers, they're not good. You know, the revenue is 10 million. It's down 53%. And look, it was already like an all-time low, but look at what analysts are expecting. They're expecting 6 million, 7 million. So basically no revenue company for a $2 billion market cap. What is their net income? Are they losing money? Oh, wow. So yeah, in my opinion, just from a financials point of view, I don't love this one. Looks like they do have a really good balance sheet. Wow. I wonder if that's from like NVIDIA or something. Anyway, I don't love it just for that. I wonder if there's any news down here. Weekly news. Navita Semiconductor expands strategic partnership with WT Microelectronics to boost distribution. Where do they do their sales mostly? Oh, so actually, here's another thing. They're not really a U.S. semiconductor place. 64% is Hong Kong, Asia. Then the U.S. is 9%, and that's only $7 million a year. So anyway, just not a big company. I don't love their numbers. The projections from the analysts aren't good either. But I know they have that NVIDIA thing, so that might save them. But let's pull up SoFi. I forgot to get to that one. I am a SoFi shareholder. I own them in kind of my risk-on portfolio over here. We're not doing too hot in here. So don't listen to me. I'm not an expert. You know, by the way, I sell nothing. I have no course book, nothing like that. I sell nothing. But yeah, watch out for people impersonating me. Someone said, was that you to follow me? No, I'll never follow you, DM you. Not in any way, but we're up 14% all time. Here is, which is bad. Definitely underperformed. I regret every share I've ever sold of SoFi and Robinhood and some of these other names. But yeah, I do own 24 shares of SoFi. The valuation is still really expensive to buy it right now. They're trading at basically 50 times next year's net income. Hey, try not to spam and chat there. Yeah, we'll try and get to all these stocks like Berkshire Hathaway. But yeah, SoFi is still expensive. Like I would maybe, yeah, I really wouldn't really touch it too much at this price. But this is the kind of company that deserves all this momentum that they had. Like if I was a shareholder, I would not be trimming or selling SoFi. That's the other dilemma. Like I would start super slow with my position, maybe like the slightest nibble, but no, it's not. Honestly, I don't love its valuation. I wouldn't buy at this price for me. But this is why they deserve certainly a high multiple. Check out this growth. I love this. No, like not even analysts expected this. On their financial services specifically, it's up 76% after it grew 101, after it grew 140, after it grew 280. Like the growth rate is insane. Just hits a new record every year, every quarter. So, and here's the analyst expectations. That's this orange line. Notice every quarter they beat like crazy on the analyst expectations. So no wonder they gap up on earnings day every time. And that's why I really think people are taking SoFi serious. They're making real net income, over 100 mil of after-tax net income a quarter with real growth, beating on expectations every quarter. Certainly deserves a high multiple. I don't know about like if I wanted this as 5% of my portfolio, I certainly wouldn't make it 5% of my portfolio today. Maybe like one, not if even, you know, it's certainly a stock you would want to own. No, it's like a good high quality name, but the valuation isn't great at this current price. So yeah, hey, we just looked at Meta. But I wanted to put, oh yeah, Berkshire Hathaway, BRKB. Ooh, Microsoft. We'll do Microsoft too. So Berkshire Hathaway, this is basically like an alternative to the S&P 500, basically an ETF in one. It keeps up with the S&P 500 historically. It's basically Warren Buffett's kind of ETF. Like they wholly own some business. Like they fully own Geico. That's this insurance business right here. They own Geico. They own like Pilot, the gas station, BNSF Railroad. But then they own a bunch of stakes in companies. Like they own a big stake of Apple. They own a bunch of stake of UNH and all these other companies. So anyway, basically an ETF kind of in one. So yeah, and it's like I like it. It's a nice diversified alternative to the S&P. Should keep up with it. Maybe outperform. I don't know. Oh, hey, Luffy. No way, dude. Thank you for the roses there. Heck yeah, we got to go over Shopify. Hey, and then we'll get to Microsoft. They don't want to drop on the Xbox prices. Oh, yeah, Microsoft does own Xbox. NFT. I haven't heard someone say NFT in a long time. What up, Looney? So let's see here. What was like? Oh yeah, the Kathy Wood portfolio. You know who owns Shopify? It's now her second largest holding because it's done so well. Is Shopify stock. Kathy Wood owns it, but it's still really expensive. But this is another stock like SoFi that deserves this high multiple. I regret not buying this one back at like 120, and I'd love to get it back at that price, but it's still really expensive. But here's what's so impressive about Shopify. I used to have a Shopify store, and every time you do a sale in there, even after paying for their highest tier subscription, you have to pay them 0.25% of every single sale that you do, no matter what. So they basically collect these royalties. But check out the annual revenue growth. That's impressive. It just hits a new record every year, every single quarter. And they print money. If you go to the FCF, which is free cash flow, print in like 500 million free cash flow a quarter. These growth rates are phenomenal. The net income has had some one-time adjustments. So we'll look at the operating profit, which is really one you want to look at. The growth rates are nuts. Everything about Shopify is headed in the right direction. Phenomenal balance sheet. Are they headquartered in Canada? Yeah, so they are headquartered in Canada. I think they're one of Canada's like biggest companies, most successful. So let's go. Hey, someone's been to SanDisk. Hey, if you guys got any stocks or that stock there, give me the ticker symbol instead of just the name of it, and I'll find it probably better. So here's Microsoft right here. Such a justifiable valuation even right now. 30 forward PE for Microsoft. Basically every company in one way or another uses Microsoft, or the companies they do businesses do. Like, you can't, I love Microsoft. So they have obviously their Office products like Office 365, Word, PowerPoint, all that, OneDrive. They've converted from a hardware business to a software business. This is their software revenue. It's 120 billion of annual revenue for the fiscal year 2025, their point of fiscal year, but it's incredible. And that's just their productivity and business. Check out their cloud business. Their Azure cloud is booming. It's a record 30 billion. They took a 1% market share away from Microsoft. That's also over 100 billion of annual revenue for them. They print net income easily 25 billion plus of after-tax net income. That's after they paid 8 billion of taxes. And so Microsoft is a beast of a company. It's a perfect never sell stock. You just buy it and never sells one. You get the dividend growth. Like, there's so much room for them to raise their dividend. They do share buybacks. They own a bunch of, I think 49% of OpenAI, and OpenAI, like, they bought OpenAI stock at a super low valuation, like 50 billion. Now OpenAI is trying to IPO for like $1 trillion, or they have like 49% like of the option to buy them still at that valuation or something like that. I don't know exactly, but yeah, that's a great one to never sell. Okay. Yeah. And Nate, how was your Thanksgiving? Hey, what up, Nick? Hey, my Thanksgiving was great. How about y'all? Hope y'all had a great week last week. Sorry, I was out of town. Amazon stock. Yeah, Amazon's another great behemoth. I've been dollar cost averaging into this one. They're on my buy orders there. And even at its current valuation, it's fair. A 30 forward PE on Amazon is super fair. Their cloud business has really been booming. They actually just got a $50 billion OpenAI, literally on their earnings day. They announced it like a $50 billion OpenAI cloud deal. So that's going to add even more to the AWS. But yeah, their AWS is the most valuable business. Is over 100 billion of annual revenue for them. Highest margin. The ETF in one right here. Robotics play, real estate play. It's like a UPS, Walmart, Instacart, Oracle Cloud, robotics play, book play, subscription play, advertising play, e-commerce play. I mean, it's an ETF in one. You just buy, never sell that one as well. And that's actually why, if you look at the top left, this portfolio is called buy, never sell, because once I buy a stock in here, I legit never sell it. And I chose Amazon as one of my never sells. They're great. Okay. Let's look at WDC. Is that Western Digital? Let's check them out. Someone said I'm putting 5K into IWDA. Hey, what up, Arb? We'll check out that one out. And the man Daniel, what up, dude? We'll check out that as well. Chronos Worth Invest. Hey, what's their? I think Mo owns a bunch of them. So yeah, we'll try to get to all these stocks here. Oh, Duolingo, remind me, look at them. So Western Digital, this company is at a fair valuation. They're trading at 24 times PE. Even after all this crazy stock price appreciation. What does this company do? It's pretty simple. It's like HD drives, something like that. Actually, maybe we can check out their website really quickly. But they're actually one of the main beneficiaries, for data center uses, the main beneficiaries of Google's TPU deal. I actually read that in like this article up here earlier. Where was it? Oh yeah, so here. Oh yeah, Amphenol is one of the. Here, you can kind of screenshot that if you want, the Google Empire. Actually, I like that screenshot. You can kind of see the whole beneficiaries. But yeah, it's kind of cool to see Western Digital is at a fair valuation even after its monster stock price appreciation. Look at how they just beat on expectations. That's the orange line. And the analysts are bullish. The revenue is just going to continue to climb higher. EPS was a monster beat this quarter. Maybe that was a one-time adjustment. Let me see here. So yeah, so the net income, it says 1.18 billion. It wasn't actually that high, but it really was around 600 million. So what's the forward PE? So it's right now PE is artificially low. It's higher than this, but the forward PE is a 22. That's insane. This is the kind of stock that's probably just going to continue to climb higher. And you get a small dividend yield. Not too shabby. So someone said I'm putting 5K into IWDA. I typed in IWDA, my friend. I actually cannot find that stock. I do apologize there. What are your top 5 stocks? Well, my top 5 largest stocks are, well, Comfort Systems was my largest one. And here's all my stocks with total equity, like Google, CEG, McDonald's. But yeah, some of my favorite buys right now would be Meta. Uh, Meta's a good one right here. Ferrari's decent. We've had a rally this past week. Okay, what stocks are you buying this week? Well, actually, I just bought. If you watch the very beginning of the stream, you'll love this, and I'm about to make a whole YouTube video on this. I go deep dive into Cavco. It's my newest stock. I bought them today for the first time ever, at an all-time high at a 21 forward PE. I thought it was fair. I made a little post in the Discord about it. They basically make these manufactured high-quality homes, affordable homes. Literally no debt whatsoever, huge backlog, insane margins, insane share buybacks on Cavco. So watch the very beginning of the stream if you want to see my whole in-depth analysis on them. I go crazy in them. By the way, the best way to support me is watch it on YouTube. I'm streaming on YouTube. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. But yeah, you can like rewind it and find it there. So someone said Kronos Group. So this company sells stuff we can't really talk about on here. If you look really quick, this right there. So, but the one thing that's funny, if we look at Altria Group, they're the largest shareholder. They own 40% of all the shares. Right now, the whole company of Kronos is worth $950 million. Well, Altria, to buy their 40% stake, paid them $1.2 billion for 40% of the company. Now the whole company's worth $900 million. They bought the stake way back here. So all of this whole sector is just being crushed. I just don't like this sector. But let's check out their numbers. Are they making money? So net income. So actually, they are losing. The core business is losing money, but look at this. The losses have completely narrowed. They're barely losing any money. So if you're wondering, how does it say they're making net income? Well, I'm assuming they're making cash on they have so much cash they're making interest on it. Let me actually see that. Yeah, they made $11 million of interest on their cash this quarter. So that's actually pretty interesting. It's actually not the worst. The revenue growth wow, look at that revenue growth. And are expected to go EPS positive. I mean, that's actually not too terrible. They actually have a good balance sheet. It's what's the market cap? 950 mil market cap. I think a lot of that is cash on hand too. Are they diluting you? No, they're not. They haven't diluted you at all the past year. They even bought back a little bit of shares. Actually, it's not too shabby. I will say, wow, I didn't think I've changed. The financials have changed my mind. Again, I don't love this sector, but it's actually not too terrible. Hey, what up, Jace? Good to see you, homie. So someone said earlier Duolingo. I wanted to get to that one. So we'll check out this one really quick. And then we'll look at SNDK and some of the other ones. Sorry if I missed some of the stocks here. I'm sorry if I'm behind. We'll look at the trade desk, Netflix. Ooh, someone said, do you like YOU stock? I actually do own ClearSecure. So here's Duolingo. It's that language learning app. If you're trying to learn English or another language, you download Duolingo on the App Store and you pay for their subscription. And their subscription revenue is booming. Check this out. This is why I actually love this stock. I put them on the watch list. The revenue is up 45, after grew 48, after grew 48. Like these year-over-year growth rates in the middle are nuts. There is no red. I mean, I can't say how impressive this is. Again, that's such impressive subscription growth, so consistent as well. Oh yeah, and if you don't pay for their subscription, you see a bunch of ads. Their advertising revenue is up 45%. But their valuation is still expensive. If we look at their current PE, it says 23. That is artificially wrong. They had this one-time adjustment making their net income go super positive. We look at the forward PE. The forward PE is a 42, which is still fairly reasonable. It's not great valuation. 42 is still a slight, 42 times next year's net income is still a slight bit expensive. So I think this gap down that they've had was actually like $180 is probably its fair price. So I love their numbers though. And they had a record profitability quarter. I mean, they're going to be making like crazy amount of money. They're deleveraging your balance sheet like crazy. I'd put them on the watch list and I'd nibble on them. I wouldn't go full size position yet, but I'd put them on the watch list, maybe nibble on them because they really do have phenomenal growth of their subscription. Another reason why I think their multiple has gone down is because of the increased competition. Like OpenAI has their own language learning app and stuff, and Google's making one, but it hasn't hurt their numbers. Their numbers are still great. What's this app? Oh yeah, hey, by the way, this is actually a brokerage right here if you want to buy stocks. Yeah, it's in the link tree in my bio, very first link there. It is an affiliate link, full disclosure, so if you go and deposit $100 above, get some free stocks. But yeah, it's my favorite brokerage. Analyze stocks on all the apps are, but yeah, cost nothing, completely free, my favorite one. Okay, let's look at the trade desk right here. So yeah, Darza, That one was pretty interesting stock there. Here's the trade desk. This is another one that I think is like just getting back to a normal valuation. Hey, try not to spam in chat there. Hold on here. So Duo revenue terminally shrinks from here. Hey, what up, croutons? So the trade desk, they trade at 45 times net income. That's after this massive gap down. So they used to trade like legit at like 70, 80 times net income. And it just shouldn't have traded that high of a multiple because there is a bit of bad things that have been happening to them. Like Netflix, for example, their largest customer, one of them used to be Netflix. Netflix used to use Trade Desk to find their own advertisers. Now Netflix actually converted to Amazon and their Roku partnership. So they use Amazon's ones, which is apparently cost less. The Amazon has their own like CTV advertising where the day that news dropped, like I don't remember it exactly. I wish I did, but it was like Amazon made this thing where it would cost upfront less for advertisers to do the same thing as the trade desk. I don't remember, but I do like them. If we go to their net income, they're still making great net income every quarter. If you average it out, easily like 100 million net income a quarter. And at this growth rate, I wonder what it's going to be the same time next year. So I put them on the watch list, but I can see why they're kind of at this 52-week low level. They might deserve it as well. I don't like saying that. I always try and keep it real. I don't try and be biased. By the way, I'm not an expert. Don't listen to me. I sell nothing. I have no course, book, WhatsApp. Watch out for people impersonating me. So here's GE Aerospace, one of my favorite names out there. Yeah, they're down 3% on the day. That's not too terrible. I mean, they have an irreplaceable business. I mean, commercial engines and servicing revenue up 27% year over year, supported by record LEAP engine deliveries and higher spare parts demand. Defense technology revenue reached $2.8 billion, 26% year over year growth. Their margins expanded too. So yeah, let's actually go check that out. So if we go to the revenue right here, the revenue is up by 23. Oh, actually, well, okay. So yeah, I knew it. So, but if you look at the core profits grew by 86%. So the margins grew nicely. It says the net, but this was a one-time adjustment. They didn't actually have an 18% margin that quarter, anywho, record profits. I really love GE Aerospace. I used to own this one and I regret selling out of them because they're much higher than where I sold it. They constantly beat on expectations. Look at that. That's the orange line. Huge beat on revenue, massive beat on net income every single quarter, and a massive beat on EBITDA. They deserve their high multiple. One of my potentially my favorite like aerospace defense play. All right. Do you like U stock? I do like U, and I do own them, full disclosure, but they're one of the stocks that I love, but I wouldn't have it as like a major size position. Like I have a lot of stocks like this, like Clear Secure, Supermicro, Toast, Axon. I love these names, but I don't trust a crazy amount of money in them because I don't want them as crazy size positions in my portfolio. But they certainly got my interest to put them as a small size position. They have a 1.4% dividend yield. They have some pretty nice growth of their business. Like, let's see the revenue right here. Yeah, revenue is pretty much at a record, nice growth rates, and the net income, very nice. That must have been a one-time adjustment. Yeah, that was a one-time adjustment that quarter. Look at the operating profit, the core business, record profits this quarter. Wow, so 50, we'll call it 50 or 48 million with taxes. Let's go see how much their dividend cost. Yeah, dividend cost 12 million. If you're wondering why does it say 37 million that one quarter, that's when they paid a special dividend. And they did a special dividend this quarter. So yeah, safe payout ratio. And also look at total debt. Debt-free company, zero debt on the books. Total common shares are saying, looks like they're even buying back some stock as well. Anyway, I like Clear Secure. If you've ever seen them, if you've ever been to like an airport, they have like these digital, they scan your face and you can like skip the line in the airport. Actually, I shouldn't say it. We actually just canceled our Clear Secure subscription because we literally just found that the normal line is just as fast as the Clear Secure line every time we've done it. We canceled literally a month ago. Okay, let's keep going here. But I do own them. Hey, what up, ASL? So, hey, what up? Barnacle said ENVA. What's that one? Enova. Hey, this one's actually on my watch list. Look at Amazon's advertising revenue growth. Yeah, dude. Amazon, I love them. Yeah, hey, we'll look at Pinterest. Sorry, I'm missing so many stocks here. I'm so sorry. I'm going to try and get to all these. Here's Enova, a $3.2 billion company. And the valuation, even though the stock has gone up pretty much to this all-time high level, The valuation is super fair. Check this out right here. The PE is a 12. The PE ratio is basically the net income multiple plus any share buybacks or dilution. But looks like it's a consumer loan and finance company. Nice growth rate in the middle there. Small business loan revenue. So maybe it's like a BDC or some kind of loan company. But anyway, if we go to the net income, they're making great money. Like 70, 80 mil of after-tax net income a quarter. This is great. Yeah, that's after they paid, shoot, 28 mil of taxes. So that that's impressive. The current P, they're trading at 12 times net income. They're trading at a forward of 9 times. That's pretty fair. That's comparable to like a bank and a BDC, around 10 to 12 times multiple. Very impressive numbers there. RANI, what's this one? Rainy Therapeutics. Hey, we're not actually going to cover this one. They're worth $100 million. The stock's at an all-time low, and they're a revenue-less company. So if we go to let's see, revenue right here. Actually, 2025 Q1 was 172K of revenue, but yeah. Oh my gosh, whenever you lose net income, that money has to come from somewhere. So look at that balance sheet. They used to have like more assets and liabilities, but now they have way more liabilities than assets. This company, like no wonder the stock is at an all-time low. Look at their balance sheet. There's almost for sure bankruptcy risk there, which is sad. Not one I trust, but let's look at Novo Nordisk right here. This is the company that owns Ozempic. BDC is a business development company. It's like a Ares Capital, Blue Owl Capital, Main Street Capital. So here's Novo Nordisk. This is a company that owns Ozempic. Sadly, they lose their exclusivity in a couple years for Ozempic. So their multiple is starting to, and they're not a U.S. company. They're a Danish company, I believe, headquartered in the Netherlands. But that's why they're kind of at a 13.5 times PE. And sadly, that might be reasonable for Novo Nordisk, around a 14 PE. They own Wegovy, Ozempic. Elon Musk is on Ozempic. But yeah, pure weight loss play, 93% of the revenue comes from their diabetes and obesity care products. Yeah, check out this quarter. They missed on revenue by a big chunk. And let me actually see this right here. They missed on their margins got hurt. So if you go to the revenue, the total sales actually grew 10% year over year, but the net income and the profits fell by 22. And that wasn't some like one-time adjustment either. Like they really did lose their margins are going out. So I know they have increased competition from like Zepbound, which is Eli Lilly's version of this. So I don't know. I need to do more research on them. Novo Nordisk finalizes acquisition of $2.1 billion for a rare blood and kidney disorder company. Interesting. Medicare negotiates 71% price cut for Novo Nordisk's GLP-1 prescription in the U.S., setting monthly prices at $274 for Ozempic and $386 for Wegovy. So I don't know what these price cuts will hurt their future margins. Who knows? But I do like Novo Nordisk. I wouldn't have it as a crazy size position that right now. FIX, yeah, hey, I made a lot of YouTube videos about this stock, so they're at an all-time high, and I'm not selling a single share. The forward PE is a 32 on FIX. This is your HVAC play, MEP, mechanical, electrical work, plumbers. They're going to be in such demand just from the AI boom. Their electrical work is up 72% to a new record. They beat on every expectation every quarter. The orange lines with the analysts expect. They beat on revenue. They beat on EPS. They beat on EBITDA. The revenue's up 35%. And the net income is up by 99. The net margin expansion is crazy. A 50% rise in your net margin, that just adds money to your bottom line. They made $291 million of net income this quarter. What was the free cash flow? $520 million of free cash flow. But here, look, some of my old videos about Comfort Systems. Look at this. This is my old portfolio. Look at this right here. I used to own Comfort Systems. I'm telling you, I'm diamond handing over here. We used to be down bad on them. Look at our Powell. We were only up 110% on them. Wow. I don't know why I'm going into that. But anyway, I really like them. And so they made basically $300 million of after-tax net income this quarter. How much in their dividend is nothing. Their dividend literally cost, where is this? $17 million a quarter. And they raise it every quarter because they're trying to get the yield up because the stock keeps going up and they're doing share buybacks. Like everything about the company I love. I love the sector, everything there. So yeah. I'm so behind here. Hey, what up, Bennett? Ticker SMH. Hey, yeah, that's actually an ETF right here, the semiconductor ETF. If you're like, hey, I don't know whether to buy NVIDIA or AMD or Broadcom, you can just buy this whole ETF, ticker symbol SMH, and it kind of diversifies your money up for you into the whole semiconductor ecosystem. And it's a more diversified approach. And it's still done great. Like in 2019, this was 73. Now it's 350. Like it's smoked the S&P 500. So yeah, it's like a way to invest specifically in that sector. AutoZone and O'Reilly's return 24% a year. Yeah, dude, they do crazy buybacks. You check out Freshworks. Hey, give me the ticker symbol for Freshworks. So SNDK, let's check out this one. So SanDisk Corp. This is another one that is benefiting from the whole AI ecosystem of the Google TPUs. They make like HD drives, flash drives and stuff like that. Or I don't know, maybe we can check out their website really quickly. Yeah, so basically these are in such demand for data centers right now. But the future expectation growth is nuts. So check this out. If we just go to the revenue growth is crazy in the EPS. So the EPS is going to be $3 next quarter, and then $3 the quarter after. So what's the forward multiple? The forward PE is a 14. They're trading at 14 times next year's net income. That's why this is probably just going to continue to climb higher if those expectations are right. Let's see, any news? SanDisk to join S&P 500 index following the spinoff of Western Digital. I did not know that. Did you know that, Looney? I did not know this was a spinoff from WDC. That's actually pretty cool. SanDisk identifies as major beneficiary for AI-driven memory supply tightness. Something like that, of some AI beneficiary. So hopefully that was helpful there. What up, man? I didn't know that. Hey, it was Jabe or Gabe? What's up, dude? Sorry it took so long to get to that one. Ans, I think, said Nebius. Nebius, this one's actually owned in the NVIDIA portfolio. Check this out. So like when you think of CoreWeave, APLD, and Nebius, these are all basically the same company. They own a bunch of data centers and GPUs. And these GPUs are in such demand right now, these data centers, for cloud hosting. So Nebius, CoreWeave, they've been getting crazy deals. Like Nebius specifically got a $17 billion deal with Microsoft. So $17 billion of the Microsoft cloud is going to be on Nebius's servers. Revenue growth was driven by AI infrastructure demand and significant partnership with Meta. Let's go look at their number. They're basically the growth is what I love about this company. Check this out. The revenue went from 30 million to 146 million. Incredible growth. And this was a record. 146 million in revenue this quarter was a record. Check out what analysts are expecting in 2 quarters. 469 million. That's an insane growth rate in just 2 quarters. And the EBITDA losses are supposed to narrow. But it's still super expensive, and they're kind of in the long run the bag holders with the depreciation of the GPUs, and I wouldn't have that as a huge size position. But CoreWeave is starting to look interesting. They lose like the least amount of money out of all the names, I think. Well, actually, no, that's actually not true. Anywho, wow, CoreWeave faces $100 to $200 million revenue impact from data center construction delays. So yeah, that's what they were actually complaining about in their earnings report. So yeah, check this out. Here's what's cool about CoreWeave. They have a contracted backlog of $55 billion, and it doubled quarter over quarter. But yeah, that included a $14 billion deal with Meta and a $6.5 billion expansion deal with OpenAI, just added to their backlog. And they cited that, revenues they lowered their future guidance because of delays and demand and stuff like that. Okay, MC said Amphenol. Yo, let's do Amphenol, and then we'll get to Eli Lilly. Did I buy anything today? Yes, I actually bought Cavco, CVCO, and look at Freshworks. Yeah, hey, I didn't know that either, Looney. That's pretty cool. And Waste Management, yo, I love all these. So here's Amphenol stock right here. The valuation is pretty fair, even at right now's price. The forward PE is a 34. That's why I bought. I don't love its current valuation, but I did buy a share at 135. I've been diamond handing this name. Yeah, another beneficiary from the TPU Google deal. But anyway, just the most impressive numbers ever. Yeah, also a big beneficiary from NVIDIA. NVIDIA, their main supplier of copper cables, I believe, is Amphenol Group. But check out the revenue. The sales are up 53% year over year. So the revenue is up 53, and the net income is up by 106. So what that means is they're expanding margins. For the first time ever, they had a 20% net margin. It's never even been close to that before. They just acquired Textron, which is a great aerospace and defense name. They also, for $1 billion, they acquired CommScope's division, which is super accretive to the EPS. The free cash flow, everything here I love. They pay a dividend. They just rose their dividend as well. So Amphenol is one of my favorite stocks, like literally of all time. And I it's probably just going to continue to go higher and higher and higher. I like it. Like I like Nvidia, but I like investing in the Nvidia beneficiaries, in the whole like AI beneficiaries, like Comfort Systems that cools down the servers, to Powell Industries with their switchgear solutions for high voltage data centers, and utility companies, and Amphenol for the copper cables and their harsh environment solutions. And I just, from Constellation Energy, the one that supplies the clean energy via their nuclear reactors, CEG right here literally owns 30% of all the US's nuclear reactors. The purest play for nuclear energy by far. There is no close second to this one. Largest pure play for nuclear energy right there, CEG, my favorite utility. Ooh, hey, what up, Jojo? No way, dude. He gifted a bunch of like boxing gloves. Dude, Jojo, if you got a stock you can look at, let me know there. I really appreciate that gift there. So let's check out Freshworks right here. What was that stock? FRSH. Okay. Let's do it. What up, Ishwar? Good to see you, homie. So Freshworks, this is a $3.4 billion company. Hey, we'll get to Amazon. Yes, sir. So $3.4 billion company. Looks like they're losing money right now. What I don't know what this company does. So they're a subscription services, software license, and maintenance. So all that revenue, this is good growth. Double-digit growth. Revenue's up 15, after grew 23, after grew 19, after grew 44. So nice growth, actually beating on expectations every quarter. That's the orange line. Beat on revenue, beat on EPS, narrowing their EPS losses, beating on EBITDA. Wow. So they've been triple beating on every expectation every quarter, but the stock has kind of just been like not doing well. I wonder why. So they've significantly narrowed the losses. Yeah, they're barely losing any money, like 4-1-1. That's great if they're barely losing any money. Actually, whoa. So I noticed their assets were slowly going down, but the liabilities stayed the same. They must be doing share buybacks, because if you go to their cash and financing activities, it's negative $100 million for the past 3 quarters. Let's see if those are on share buybacks. That would be super interesting, and they probably would do it for a good deal. So yeah, look at this. No way. For the past 3 quarters, this company has spent $100 million every quarter buying back their own stock. Wait, $300 million, $3 billion company, that's 10% of the company nearly. Let's see. So the net income, 84. So I think this company just bought like 10% of all the shares. I don't know about what their stock-based comp is, but I don't know. It seems really interesting. I can't find anything wrong there. Again, I don't know much about what they do, but they seem really interesting. So, hey, Reed, we'll get to Core Z. And so, hey, what up, Jojo? Yeah, Amazon, legit monster ETF in one. A great never sell name. I'll actually show you the breakdown here, because they used to, I have to go back down here. Yeah, look, they have their online stores, their third-party seller services, the AWS business, their most valuable business. It's $33 billion in revenue this quarter, $130 billion a year annualized. Like, it just hits a new record every quarter. They're also a subscription model play, Twitch Prime, Amazon Prime, advertising play. They have physical stores, grocery stores. So, and they print net income, and look at the net income growth specifically. The net income's up 38, after it grew 55, after it grew 240. Like, they're printing net income, like 20 billion of net income a quarter. What I love about Amazon is that they don't do share buybacks and they don't do dividends, so that they just plow money into investing in the future. Like, they can plow money into AI, and you don't want Amazon as competition. If we look at the bottom, they legit spend basically 30 to 40 billion a quarter on new investments. It's insane. So, yeah. Hey, free me. What up, K-Dude? What stock would you give someone as a Christmas gift under $100 a share? Oh, that's a good idea. I don't know. I wonder if I own any under 100 a share. Here's maybe a share of Sprouts Farmers Market. I don't know. I like that one. Maybe Call Maine. That one actually could be interesting, because every single quarter they pay a qualified dividend. Every quarter it's different. Kind of keeps up with the price of chicken eggs. I don't know. So okay. CORZ, please. What is CORZ? Is that Core Z Scientific, like that Bitcoin mining company? So yeah, this company basically just mines Bitcoin, I believe. That's like all they do. So yeah, digital asset self-mining segment, um, digital asset hosting mining segment. So uh, that's not a great balance sheet. Normally, the Bitcoin mining companies have a lot more assets and liabilities. I don't really know about this one. Um, let me pull them up versus the price of Bitcoin. I wonder how that looks. Looks like they've done quite better than the price of Bitcoin or since they IPO'd. Oh my goodness, what am I clicking here? But and I don't know. I know. Oh, CoreWeave was trying to buy a stake into them. That's why they were probably rounding up. CoreWeave was trying to buy a stake into them. Why doesn't InnoData ever get any love? Yeah, InnoData is still a bit pricey, unfortunately. Still a bit pricey. I had to leave for a call. Did you review? Yo, Jojo, we literally just finished the review on Amazon. So, by the way, I'm streaming on YouTube. That's the best way to support me. I'm streaming on YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But you can just type into YouTube Nathan Robert. You can like rewind like just from 1 minute ago. So I just bought into Bull. Hope it pops off. I actually own some Bull as well. This is one of my newest positions. If you go to our Roth IRA, it's my second newest position, and they're still expensive. So I wouldn't have it as a major size position yet, but 50 shares is like the perfect amount for me. I just put a couple $100 into there, and Webull stock, ticker symbol Bull, is literally this platform right here. Webull publicly traded, and I've been using this platform for many, many years. You know, I've not done great. Only up 14% all the time. But why I like this stock is because this app just added in the prediction market and crypto back to the app. And I think that's going to make them like so much more money, because whenever you go buy and sell a stock in a brokerage, they make like a fraction of a penny. But whenever you do crypto, transaction market, advisory stuff, margin, all the stuff you shouldn't do, they make good money on that. So anyway, that's why I bought a bit of a Webull. I also own Robinhood stock, and I own Futu stock or Moomoo stock right here. I own all the brokerages because I love the picks and shovels play. Like I don't own any crypto. I don't own any Bitcoin, but I'll own the companies that takes a high fee every time you buy crypto on their platform. Maybe, I don't know. So let's see. Let's see. Yo, Plasma, good to see you, homie. He said, can we look at COHR? And I'm missing out on some stocks here. Dave is down 7% today. Yo, that's a good, and he picked up a share. I think Dave is a steal of a deal. I'll actually go over Dave next. Oh, yo, MC, dude, heck yeah, MC. We're going over ADPT after this. Yo, thanks again for that gift there, MC. Uh-oh. Okay, we're good. Yeah, we'll go over it. Okay, so here's Coherent stock. So a 44 forward PE on this company. There's a lot of future growth that's expected here, apparently. Let's actually go see that right here. So yeah, EPS, yeah, looks like they had some one-time adjustments the past 2 quarters. So they're going to be making like 60, 80 cents the next 2 quarters. Yeah, EBITDA is supposed to go straight up. So they're a data center and communications business. I'm sure that's just benefiting from the whole AI boom. Is there any AI star? Let me actually go down here. AI news down here. Nope. But let's go look at their numbers right now. So the revenue is up 17% after it grew 28%. I guess it's really just the future. Oh, wow. The operating profit, or basically the margin expansion here, has been nuts. Look at that. These double and triple digit year-over-year growth rates on the profits and the net income, basically. That's quite impressive. So, yeah, like they had some one-time adjustments, it looks like, last quarter, but oh, geez. Man, these winter allergies begin to me. Okay. So yeah, actually, Coherent seems like one of the AI-like beneficiaries. I think we were reading that in the article up here. Actually, let's check out this article real quick. There was a cool picture that they had right here. If you're looking for some of the potential supply chain targets, like they have like each sector broken down. It's cool to screenshot this if you want to. Like they got Amphenol down here as a fiber and connector play. So yeah, there's kind of like your whole industry. But let's look at ADPT stock now. So ADPT right here. So this is, I actually have them on my watch list. So the stock is lower than it was in 2019, but they've had a monstrous rally. The stock went from $3 to 18 and specifically gapped up. Let's go look at what caused this right here, because that's very interesting. So they sell minimal residue disease probably treatment. Yeah, look at those growth rates. Impressive. It's up 52, after it grew 52. After grew 21. So they're on an incredible streak of growth on this business. They also have their immune medicine. Wow. Look at that. Literally just quarter over quarter, a 3x increase. So something that's really impressive. And that was a big beat on expectations. Massive beat. No wonder the stock is doing so well. Analysts expected 64. They did 93. They went net income positive? No way. Was that real? That was real. They really made 10 mil in net income on that. That's really impressive. So you know what? I was going to say, let me put them on my watch list. They're already on my watch list. Market cap at 2.8 billion. So yeah, no forward PE yet. So I can see why they've gone from 3 to 18. I can see why they've had such a nice rally. Looks like those are really impressive growth rates here. Okay. Pharma's going to print more when we all get those sick. So actually, my healthcare play, I actually own HCA Healthcare and Core Medics. Those are my two healthcare plays. I also have I love Eli Lilly as well. I don't own them though. I also own one other one. I think they're called Catalyst Pharmaceuticals. Where are they? Here they are. I always forget about this company. Phenomenal numbers on this stock. Here's why I bought this stock today. It hit an all-time high, and I didn't mind doing it. 13 PE on this company. So they're trading at 13 times PE. It's a $2.8 billion company. Fortress balance sheet. Look at how the assets grow every quarter and the liabilities stay the same. It's because they're making so much net income. They don't pay a dividend. They don't owe anyone any money, so they just retain all the cash, and that cash earns interest. They're super growthy. The revenue's growing very nicely. The net income's growing even more, so there's net margin expansion. So I really like CPRX. As a small position, again, as much as I love them and as much as I love like Core Medics as well, I have $500 in this name, $700 in Core Medics. They're not worth putting a crazy amount of money in, but certainly worth maybe a little bit. I just bought Meta. I'm up 9%. Heck yeah, dude. Yeah, Meta's a great never sell. That one is one I just... SPSC. What's this one right here? So SPS Commerce. Yikes. Look at that little stepping stone. Little gap downs here. So let's go see. Yeah, so they gapped down on earnings day. Let's go see what their numbers were. So fulfillment revenue. So they missed on revenue. They beat on EPS and they beat on EBITDA. So they still make really good net income. Check that out. Yeah, they're making easily 20 mil of after-tax net income a quarter and a fortress balance sheet. No way. They got 133 mil of cash. Let's see, is that making them interest? No, or it's just maybe, I don't know. But yeah, the cash flow looks great. What was the actual free cash flow on that? The free cash flow was 55 mil. I mean, everything here looks like it's headed in the right direction, but I noticed they gapped down on earnings day and they gapped down on earnings day again. And they didn't exactly miss on expectations. Maybe there's some really bad future guidance, or maybe they're just getting back to a normal valuation. 36 PE might still be expensive for, I don't know though. Honestly, I'd put them on the watch list. 32 forward PE, $3 billion company. It might be reasonably valued right now. Do you still like SFM? I do. I really do like Sprouts Farmers Market at their current valuation. I'm so behind here. Dell stock, and I actually like Dell more than Super Micro right now. I do own Super Micro Computer. This one's like the more better play, I think. They've really benefited from, a lot of companies buying a bunch of chips right now. So Dell's revenue on their infrastructure solutions grew 44%, like a huge bump up quarter over quarter. That was phenomenal. They also have their client solutions, which is a slow grower, single digit, sometimes negative. But here's the best part. They're kind of like a value play, low margin business, commodity, kind of like Super Micro, but they trade like one. Like if we go to their valuation, they trade at 17 times PE. That might be fair. Morningstar has it at $150. Do they have a moat on this one? Yeah, they have no moat according to them. They say while their numbers are good, they have no actual moat. But same with Super Micro Computer, unfortunately. But they have good numbers. Check this out. They're easily making over $1 billion in net income a quarter, 1.4 billion net income a quarter. What are they doing with the 1.4 billion net income a quarter? Well, their dividend only cost 350 million. And if you're wondering why did the cost of the dividend go from 390 to 350? That's because they bought back their own shares like crazy. Because whenever you buy back your own shares, you don't have to pay dividends to those shares. It also makes the EPS go up, which makes the PE ratio go down and gives you more ownership in the company. Basically, share buybacks force the stock to go up. And they spend literally a billion to 2 bill a quarter, which check out, here's what that does. If you go to the net income, it's up by 37, but the net income per share is up by 44. They bought back 11% of the company just in the past year, on top of returning to you a 1.5% dividend. Really impressive, very shareholder friendly company there. Uh, okay. Um, they supply Intel and Taiwan Semiconductor pre-made parts, AMA2. Let's check out AMAT. Yo, and then Brian, yo, shout out to the member on the YouTube stream, Brian and Looney. Appreciate y'all. We'll look at AMT after this. Okay, so here's Applied Materials, AMAT. Someone said they supply the parts for Intel and Taiwan Semiconductor. So Applied Materials, they're a $200 billion company trading at 28 times PE, forward PE. Look at look at that growth that they've had. It's like at a basically all-time high today. That might literally be a new all-time high today. So yeah, they sell semiconductor systems. Yeah, they make good net income, easily 1 to 2 billion of net income a quarter. Uh, Good free cash flow numbers as well. So yeah, 2 bill of free cash flow a quarter. Let's see what AI has to say about them. How many accounts you got? Hey, watch out for people impersonating me. This is my only account, or I have a YouTube and a TikTok. That's literally it. Yeah, watch out for people impersonating me. I sell nothing, no course book, WhatsApp, Telegram, never follow you, DM you, nothing like that. So, okay, yeah. Best way to support me though is subscribe to my YouTube channel. It's called Nathan Roberts, also in the link tree in my bio there. But hey, wait, Brian, are you talking about American Tower Corp? This is actually a REIT right here, a real estate investment trust, and they own the cell towers. Uh, so their top tenants are literally AT&T, Verizon, and T-Mobile. Uh, Basically, American Tower Corp owns the tower, and then um, AT&T pays them money to put their broadbands on the tower. And this is a REIT right here. They're also a data center REIT because they acquired, what was the name of it? They acquired a data center company called like Core something, but yeah. But anyway, I like them because they're a more international play than just a US cell tower play. I think these other countries are going to offer some more growth for cell towers like Brazil, Mexico, Germany. There is some Uganda. There like that's 200 million in revenue a year for them, but there is I guess I don't know if this is real competition yet, like Starlink, Apple satellite or Amazon satellite. I don't know if satellites will maybe one day hurt the Wi-Fi, the cell tower specifically. Like Ethernet should be good, but like cell towers might get. I don't know, but I really like American Tower Corp. They have a safe payout ratio. I do like them. Um, Someone said, just buy Chevron and you'll be good. Yeah, Chevron's a nice yielder, but this does not and has never really outperformed the S&P 500. But you always want to have oil, or I think as a little bit of your portfolio. And hey, old Papa, dude, thanks for that gift there, the Let 'em Cook, or I mean, OLPs, Papa. Thanks I appreciate that. But yeah, Chevron, you get a great yield. Warren Buffett owns this one. You get a 4.45% dividend yield on this company. And you get a 4.45% dividend yield. Then you're just hoping for like 3 to 4% in stock price appreciation every year. So for maybe 7% annual returns. But yeah, whenever there's war fears, inflation fears, whatever currency fears, oil does good in those environments. But Chevron is the same price that it was in 2022. The S&P is up like 80% since 2022. I don't know, but you buy this as a small chunk of your portfolio. I think nice diversification play. Buffett loves this one. If you go to Warren Buffett's portfolio right here, 6.5% of his whole portfolio is just in Chevron. He owns Coca-Cola, Bank of America, some good names there. So, um, actually, I actually own, instead of Chevron, I actually own MUSA. They're another oil and gas stock, but they have a lower dividend yield, and that's what I like about them more. I think they're going to have more stock price appreciation, but 0.5% dividend yield. Looking for GV Financial, Nathan, or dividends, or what's up? Um, If you got a stock you want me to look at, let me know there. Wait, or maybe you're talking about. Okay, we'll see here. Been looking to invest in the oil industry. There's also there's like an oil ETF. I forget. Um, I'm not gonna know, or maybe it's XOP right here. No, I don't think this is the one. There's one owned by maybe is it XLV? No, that's the. All right, doesn't matter. Yeah, hey, look at the XLV healthcare ETF. It's done phenomenal. It was struggling back here solely because of UNH and all the Medicare, Medicaid stocks. But Eli Lilly and Johnson and Johnson's oncology plays really paid off with their Shockwave acquisition. So, Calvin, what up, dude? I appreciate that. Dion said CEG. Yo, I'll be quick about this one. This is my favorite nuclear play, my favorite utility play, natural gas play, but nuclear play. This company literally owns 30% of all the US's nuclear reactors. Purest play for nuclear energy by far. There is no close second. They make the best net income. They'd have the best share buyback program, great dividends, great synergistic M&A. They acquired Calpine. It's instantly accretive, $2 of yearly EPS, and that closes very soon. So their forward PE is a 29. I mean, it's great. And I am a shareholder of CEG. I'm totally biased, but I own them for a reason because I really like them. So we got 15 shares in them here in our dividend-only portfolio. So let's check out AEHR stock. AEHR. What are your thoughts on PGY? Hey, we'll get to that one too. So AEHR Test Systems. So they're a small name, a $670 million market cap. So do beware, that is a very small market cap. But let's go look at their numbers. So they sell systems. How's that doing? So, $6 million of revenue. So yeah, extremely small revenue here. Their contractors revenue looks like it just hit like an all-time low this quarter, and their services revenues up 64%. But when we combine all the businesses together, the total revenue combined, the revenue's down 16% after it fell 36%. So that's rough. They have a good balance sheet though, but yeah, no revenue, and it looks like they're losing money every quarter. We want to see really the growth come back. So yeah, hey, thanks again, OLP. Let's check out Double Verify right here. I've heard of this one before. I don't know what their mode is. Let's go investigate. So the market cap is $1.7 billion and the forward PE is a 22. So the right now multiple is expensive, like a 40, but it's the forward PE that's interesting. But it looks like they did miss on their growth. So they missed on their revenue and they missed on their net income this quarter. So maybe that's why the stock has been struggling, but they have a good balance sheet as well. Double Verify. Wow. Let me actually pull that up. So $200 million of cash. That cash is earning them interest. They made $500K of interest on that this quarter. They are net income positive. Yeah, they really are. They are making net income every single quarter, but it looks like the net income is down from the previous year. Sales growth is slowing, but still double digits. It's up 11% after it grew 17, after 28, after 35. So yeah, it looks like the business profits did fall. Morningstar Research, economic moat, none, or it doesn't. Okay, that's not right. And the forward PE seems decent. I mean, they're making net income every quarter. I mean, it really doesn't. Man, I might have to end the stream. Sorry. Actually, we've been streaming for over an hour. By the way, if you want to hit the follow button, we stream every single day, sometimes twice a day. We might do a live stream later tonight. We'll probably be live for another 20, 30 minutes. But okay, let's look at some more here. Yeah, hey, no problem there. They own Pinnacle Software. I've never heard of Pinnacle Software, but that sounds interesting. Apple stock, best construction, low cost stock. Yeah, Apple, I think it's like up on the day. So if we go to our watches down here, yeah, look at that. Like the Qs are struggling, but Nvidia and Apple are green specifically. Apple is being rewarded for not spending like crazy, like $10 to $15 billion a quarter on GPUs, like these other Mag 7 names are. Wow, Powell Industries is almost positive. Actually, the market is. Let me check the SPY real quick. Yeah, we actually are having a nice little rebound. Great news. Okay. I do want to look at Apple in a second. Let me get to PGY stock. What is this one? Oh, Pagaya Technologies. I forget what this company does. So it's a $2 billion company. The revenue comes from the US. Let's check out the revenue growth. So the revenue growth is really good. It's up 36% year over year after grew 23, but the revenue's up 36 and they wow. So if you look at that one quarter, they lost 250 million one-time adjustment. So basically you look at the operating profit, the core business when you exclude that is doing phenomenal. This is great news. What does this company do exactly? Let me figure this out. So, uh, AI data networks for the financial industry. Maybe approve more loans, retain more customers with this. If you work with them, looks like they have a partnership with SoFi, Ally. Um, I don't know. It helps, maybe helps companies get a better margin if you use their software. I don't know. Pretty interesting there. Let's look at Apple right here. A great never sell name. I mean, you just buy never sell Apple. Apple might be might be the most expensive Mag 7, except for Tesla, because Tesla's just it's a mind of its own. But yeah, Apple, they're at an all-time high today. So yo, congrats. Yeah, so many people are locked in the Apple ecosystem. I wish I owned Apple. But most people do just via the S&P 500, so you don't need to sweat about that. So yeah, Apple, what's their market cap now? They're worth $4.17 trillion. So yeah, they have their smartphone market share of 17%. They make their own smartphone chips, 14% smartphone chip market share. Literally half the revenue comes from their iPhone sales. But then the iPhone sales have been flat for a couple of years. I mean, look at this. On an annual basis, the iPhone sales are lower than it was in 2022. But the most valuable part of Apple is actually their services business. So whenever you go spend like $100 in the App Store, Apple keeps 30% of that. They basically collect high margin royalties. I mean, they do incredible. The growth is incredible here. They also have like the Mac sales, the wearables, AirPods. They also were really affected by tariffs back here because look, only 36% of their revenue came from the US. A lot of their stuff is manufactured in China, India, Indonesia. I don't remember exactly, but yeah, Europe is 26% of all the revenue. Greater China is 50%. So yeah, Apple's a beast. You know, they do insane share buybacks and they're being rewarded for not spending so much on AI right now. So that's pretty cool. Chris said, SOL, bro. Wait, are you talking about Solana or let me know if you're talking about Emeren Group or I don't think you are. You're probably talking about Solana. What's the best low cost construction stock? I don't really know any construction stocks. I mean, um, maybe like a home builder stock, but actually, I really like Cavco, CAVCO. They make these small manufactured homes. So maybe a construction play, low cost one. I don't know if it's super. It's like at a 21 PE right now. It'd be United Rentals, huge beneficiary in construction. You know, Caterpillar would be another great one. But yeah, I own United Rentals. I got 5 shares of them. We're up 29%. Nothing crazy, but I love them. Let's see. NetStock. Hey, this is a really cool stock. This is Cloudflare. If you didn't know, huge cybersecurity name. Literally 18% of all of the 18% of all the global internet traffic goes through Cloudflare in one way or another. They're a behemoth on the internet. Let's go see what their growth was. So enterprise sales, accelerated revenue growth, highlighted by a $34 million European tech contract and 33% increase in paying customers. Well, let's go look. Let me also look down here. I know there was a outage a while back, like 2 weeks ago, or probably like 3 weeks ago on Cloudflare. But yeah, the revenue growth is so. Let's pull up on an annual basis. I mean, this is so great. I mean, in 2016, the revenue was 84 mil, 130. Like the growth rates, it was 59% growth, then 42, then 48, 50, 50, 40. The growth rate started to slow down just because of the law of large numbers, but I love Cloudflare. But they're still struggling to get net income positive. They're still losing like 30 mil on average a quarter, but they can afford these losses. And they're also doing some crazy investments they have done the past 2 quarters. So basically, if you don't want to have your own in-house cybersecurity, firewall, stuff like that, you just rent it out from Cloudflare. I'm not sure if AWS or I don't know. I do like Cloudflare though, but the valuation's way too high. I'm talking Cloudflare, the PEG ratio is like an 8. Like the price for your price to earnings to growth, so where you're paying for the growth is way too crazy on Cloudflare, but I really like the name. Thoughts on Coca-Cola? My average is 1080. Yo, Waffle, are you talking about COKE consolidated? Because your average is 1,000 or 108. Yeah, this is one of my they're in my buy never sell portfolio. Oh, the market closes in 10 minutes. Hey, the closing cross. But yeah, this is Coca-Cola Consolidated. This is actually the bottling company for Coca-Cola. They've had one of the best performing stocks in like history. Like it's crazy. But the valuation is still pretty fair. The valuation now, they're trading at 23 times PE. And that multiple is about to fall by 22% because the reason they gapped up and have been doing so well right here is because you wouldn't believe this. This company, I've never seen a company do this. They bought back 22% of all the shares that exist at $127 a share. I kid you not. They bought back 22% of every share that exists. So that's literally going to force the EPS to go up by 22% every quarter from now on. It's going to make the dividend cost 22% less every quarter. I just love share buybacks. Gives you legit way more ownership, makes the P ratio go down, EPS go up. So they're just a great company. They bottle for Coca-Cola. They bottle for Monster Beverage. They bottle for Dr. Pepper as well. So I really do love Coca-Cola Consolidated. And I love the CEO. I've met the CEO. He's a great guy. Actually, they're a very unique company. They don't do earnings calls. Literally, and the CEO literally owns 70% of all the voting rights. So what he says goes. It's actually like a Christian value-based company. And he keeps it that way because he has 70% of all the voting rights. Pretty cool company. All right. Okay. Someone said ABBNY. Hopefully I can find this one. ABBNY. So we found it. Check this out right here. Wow. Check out that stock price appreciation. This one's done really good. $130 billion company. What does this company do? So electrification, motion, motion revenue, process automation. Hey, we love automation. Oh, robotics and discrete automation. That's interesting as well. So somewhat of a robotics play. I know the electrification revenue must be doing great right now. So yeah, they beat on revenue this quarter. They beat on EPS, which is net income every quarter, and on EBITDA. So they've been triple beating every quarter. Yeah. So this is in USD as well. They literally are making easily over $1 billion of net income every single quarter, and you get a 1.5% dividend. Yeah, you're right. It looks like it is they're headquartered in Switzerland. So that's interesting. ABB. Oh, I've heard of them, I think. Yeah, no, you don't get my cookies. So pretty interesting there. ABB Group. REGN. So this company has been through some stuff, but the valuation is so fair, I think. Well, it used to be way more fair down here at like $500, but yeah, they deserve to have this little appreciation that they've had. The reason the stock is well off its all-time highs is because they sell this prescription called Isla, and basically Isla, another company. Yeah, those declines don't look great here. But they have their higher dose version called Isla HD that's doing great. But another company infringed on their Isla patent, and they took it to court, and the courts basically said that anyone can use the patent now or whatever. Terrible news for the stock. So it's going to be like a generic prescription, but they have all these other prescriptions. Like at their main collaboration revenue, look at the growth here. It's up 18 after 15. So this part of their business is going to struggle, but yeah, I know they're working on this other thing where like whenever you take Ozempic, you lose a lot of, or weight loss prescription, you lose a lot of muscle mass, but apparently if you take one of their things, it'll not lose you the muscle mass. I would never take this. I mean, I don't know. I don't know what these, if they work or whatever, but they print net income easily $1 billion easily $1 billion of net income every single quarter. Really good balance sheet as well. Yeah, no debt. Let's see if they're earning interest on their cash. They're almost surely are. $8.5 billion of cash on hand, and they made $155 million of interest on that $8 billion of cash. That's just incredible. And that's after them doing buybacks. Let me see that. So yeah, that's after they spent $4 billion the past year on share buybacks. They still have that $8 billion of cash and the dividend. They now pay a dividend. It's only $90 million. The cost of dividends going down because of the share buybacks. I do like REGN, but it's kind of like a mixed bag of results, and they haven't been beating on the results because analysts knew this. Analysts know this and price this into their numbers, and their other prescriptions have been beating on expectations. You know, They've been beating on revenue, huge beat on net income. Wow, they expected 8, they did 13, huge beat on 30% plus beat on EBITDA as well. So I can see why they've definitely off their bottom, and that 20 PE is pretty fair. Hey, what up, Jiten? How's it going? Oh, SEZL. So this one is a really cheap financial play. 14 forward PE. Like the current PE is an 18. They're trading at 18 times net income currently, but they're trading at 14 times next year's net income, which implies there's a lot of EPS growth that's coming. We can kind of see that. Yeah, wow, the net income per share is supposed to be $1. I might, even though I own Dave, I might even consider buying just a tiny bit of Sezzle. I don't want to like overlap all my holdings, but this checks all my boxes. I mean, the revenue's up 66, after grew 71, after grew 30, but this revenue was 116 million. And on that, they profited 30 million or actually 26 million. They're making easily 25 million plus a net income a quarter, deleveraging the balance sheet. Look, the liabilities used to be 75% of the assets. Now it's only 56. Investing along to the future. Well, actually, no, it's only $1 million. But anywho, Sezzle I really like. Charles Yukiam owns 43% of the shares. So yeah, that if he owns the shares, that must mean the short float or the float market cap. So yeah, look at that. So the whole company is worth $2 billion, but only $1 billion of the company is available to trade. So I wonder if there's short interest. Oh, so there's 12% short interest. Again, there's just not that many shares available. So, but I actually love those kind of stocks where anyway, there probably are some risks here, but I do like the numbers. I mean, that's a cheap valuation, 14. I mean, I wonder what the bear case is. Like, did I say buy now, pay later? Maybe they're exposed to like buy now, pay later loans. Maybe Sezzle paying 4. Maybe it's like a firm, like an Affirm. Yeah. A payment platform enables bank-to-bank transfer of money between consumers and businesses. Okay. All right. Let's see. Best stock I ever bought was Johnson & Johnson. This used to be like a boring blue chip stock that everyone just kind of trash. It just barely keeps up with the S&P. But ever since they've done their Shockwave acquisition, their oncology business has had massive growth. And that's what's really justified them going up so much. They print net income, literally print net income. I think they can pay off all their debt in like 2 years of free cash flow. I don't know. But yeah, Johnson & Johnson is really cool. You basically look at this. You get a 2.5% dividend yield. That yield used to be much higher. As you know, when the stock goes up, the yield goes lower. But basically, it used to get a 3% yield, and then you hope for like 2 to 3% stock price appreciation, but they've done well more than that recently. Yeah, really impressive. Oh, hey, Brian, did I look at the wrong stock? You said RGEN. Wait, RGEN. I think I did REGN. I think I looked at, Brian, did I look at the wrong stock? Oopsie. Let me know if you meant that one. Ooh, Vincent said NU stock. Still hopeful on Ferrari? Absolutely. I'm actually, its current valuation, like the forward PE is a 34 for Ferrari. I was literally so close to buying another share, literally today. But I said, I'm being so disciplined in this market with how things are. You got to be so disciplined. I'm only down 5% right now. I'm only down 5%. I'm going to be disciplined. I'm not going to buy another share unless I'm down like 10% on my position. And that's how especially in this environment, you want to be careful not to just full size dump position into stocks or into one stock or something right now. But certainly nothing. It's just momentum right now. Nothing's changed my long-term bull case on Ferrari. I really like them. They seem like a great stock that should keep up with S&P. But let's pull up NU stock. Hey, by the way, I'm not an expert. Watch out for people impersonating me. I literally saw nothing. So here's NU Holdings. This is actually a crypto bank out of Brazil. One of my favorite crypto plays that's not just buying crypto individually. And most of the revenue comes from Brazil because that's where crypto transactions are most popular for using crypto for transactional purposes, like buying stuff. Because in the US, we have a good currency, but down there, they don't. But yeah, the growth has just been nuts. That's the best part about NU is just how growthy they are. The revenue's up 42, after grew 37, after grew 65, after grew 128. They're on a streak of growth. And that's what I love about them. And this is in USD as well. So the revenues of 4.17 billion. Out of that, They netted 780 million of net income. That's insane. Now, one thing I will say, why are the margins so high? They're headquartered in the Cayman Islands, and I believe they pay no taxes. Maybe I can go verify that. Taxes. Yeah, I legit think they pay no taxes. And they actually just, yeah, they're headquartered in the Cayman Islands. They actually just applied for their U.S. banking charter to try and get into the U.S. market. But yeah, basically, they're at an all-time high today. They deserve it. Fair multiple, 22 forward PE, great revenue growth, great net income growth. Good company. Probably wouldn't have it as a big position though. AZZ. Hey, what up, Tommy? AZZ. I haven't heard of this one before. Yeah, exactly like a firm. Hey, what up, Mark? We'll look at KULR. Yeah, unfortunately, NVTS. I would not touch Navita Semiconductor. I don't like that one, sadly. Not good financials there. But here's AZZ. They're a $3 billion company trading at 10 times PE. That's a fair valuation, 10 times PE. What industry are they in? And is that normal? So the industry average is a 29. So pre-coat metals. Okay, so the revenue is down 4% year over year, and their metal coatings is up by 10%. So it's kind of like a mixed bag there, but this might be why the stock has kind of been flat. I don't know, but they've been missing on expectations every quarter. They missed on revenue every quarter for the past 3 quarters. That might explain why they're trading at 10 times PE. That might be fair for a company like with low growth, but yeah, it looks like that sucks too. So if we go to the net income, it says they're trading at 10 times net income. They're actually trading at a way more expensive valuation. Their net income has been propped up. So look at this. It says they made 170 mil in net income. Well, that quarter, they didn't actually. The business only made 69 mil. So the PE ratio and EPS have artificially been inflated. So the multiple is way higher. The growth isn't great. Sales are up 2 after it grew 2. It's like low single digit growth on the revenue here. Nothing's just blowing me away here. But I mean, they're still making, this is the good news. They're still making easily, we'll call it 50 million of net income a quarter. Oh, they pay a dividend. So they're making 50 million net income a quarter. Let's see how much their dividend cost. The dividend cost 5 million or 6 million this quarter. So yeah, they can easily afford that. That's good. I don't know there. So there's your metal coatings play. Maybe we can check out their website. Headquartered in Texas. Sustainable, unmatched metal coating and pre-coat metals. Well, there you go. Maybe we can look at their investor presentation real quick if they have that. Don't tell me they don't have a presentation. Oh, they should have it just right here. Okay, here we go. Investor presentation. Maybe we can find something cool on the slides real quick. Not seeing anything. Total net leverage of 1.7. Acquired Canton. Robust M&A pipeline. So let's see. End market. Guess that's where they're diversified into. Well, I don't know why I'm digging into this so much. Okay. Let's see here. KULR. Let's check it out, Mark. KULR. And then we'll get to, hey, what up, Ko Piang? How's it going? Good to see you. YouTube agent. What's up, dude? I hope there's a Santa Claus rally. Yo, me too. Usually we get one just because there's no one really trading on the books. But check this out. Kohler Technologies, a very small name. Actually, they're worth $130 million. So we don't really cover these kind of stocks here. Oh, so what does this company do? It looks like they mine Bitcoin. So, and they're also an energy management platform that does $2 million in revenue a quarter. So basically, I don't want to pick on Kohler. I've looked at all of the Bitcoin mining companies out there. I've looked at Marathon. I've looked at Hut 8. I've looked at Core Z. I've looked at CleanSpark, Hive. I've looked at every single Bitcoin mining company out there, and there's just not a single Bitcoin mining company that consistently ever outperforms actual Bitcoin. So there's just really not a world where I'd really recommend a Bitcoin mining company over actual Bitcoin. To keep it real with you. And I'm not just picking on them. I've literally looked at all of them. Like, it's not just them. It's CleanSpark. It's Marathon. It's Hut 8. It's all of them. Okay. Hey, Dr. One Fly. Thanks for those gifts there, homie. I do appreciate that. Okay. SPHR. Yeah, that's a funny name. So has anyone heard of like the Las Vegas Sphere, that like massive sphere where you can like buy tickets? They had like a WWE event in one of them, but they just opened these recently in the past couple years here. Yeah, check these out right here. Here's kind of what they do, like concerts in these as well. So they actually, funny enough, they don't own the land under it. That's Vici Properties. You can get exposure to the Las Vegas Sphere via Vici Properties. They pay rent they have a triple net lease with Vici Properties. But yeah, Madison Square Garden Networks. Well, that growth isn't good. It's down 41% after fell 5, after fell 4, after fell 5. Well, what about this one? The Sphere revenue, though, that's up 2%. Yeah, basically, as the Sphere came online and you could buy tickets, the massive growth, a couple hundred mil a quarter, which is cool. Are they profitable, though? Super not. So they're unfortunately losing 50 million of net income a quarter, and that's pretty devastating, which is 200 mil a year. They lose 8% of the entire company in net income a year. So they really need to get profitable. Look at this right here. Check out the stock price appreciation. The stock's been doing great. I don't really know. I mean, they've had actually the revenue's down 18% year over year, but it is comparing from I don't know about this one. I don't love this industry. I'd rather own, sadly, maybe Netflix or Disney, and I do own Disney stock. Or actually, I own Vici Properties. If you go to ticker symbol VICI, these are the company that owns the triple net lease for the Las Vegas Sphere. And they're actually a REIT that pays a nice yield, a 6.3% dividend yield. They own all the land under all the Vegas Strip properties like Caesar's Palace, the Luxor, MGM Resorts, the Wynn, all of them, which is really cool. Hey, all right. Let's see here. Do you get a bigger tax return or wait? This will be my first year having investment accounts when I do taxes. Do you get bigger tax return? No, you just get a 1090. You just basically your broker just gives you a filled out 1099 form at the end of the year that just shows you how much net profit and loss you either made or lost, and it should be really easy. No, like TurboTax would do it for like $30 or something. All right. Okay. Lemon said OUST. I wanted to get to that one too because Ouster has had some pretty fascinating growth here. They're a $1.3 billion company. This isn't a stock you want to really trust as like a major size position. You want to have it as a small size position. But if you want exposure to the LiDAR sensor industry, check out this one. It's a small name, but they have some nice growth behind them. I won't just completely dismiss the stock as some junk because they do like the growth here. Revenue's up 40%. Like these growth rates in the middle are phenomenal. Record sales this quarter. Beating on expectations, and the expectations are expected to just continue to climb higher as well. Net income losses are supposed to persist, though, but they are losing less net income than analysts are expecting every quarter. So they are losing 20 mil a quarter, but the growth is there on the sales. So as long as they keep up the revenue growth and narrow their losses at the same rate that they are, it's actually not too terrible of a play. I wonder, LiDAR sensors, we're seeing Uber drivers slowly being replaced right now by like autonomous cars. Think of like Waymo, Robotaxi, all that. Robotaxis don't use LiDAR, but Waymo does. They make these sensors right here. I wonder if they're also for like maybe drones and fishing. Let's see, security, traffic control, robotics. I don't know. Again, not a huge company, but they did do 40 million in revenue, and that growth was quite impressive. So that's what's decent about Ouster. Hey, what up, Jimbo? Good to see you. If you guys got any last minute stock Jimmy look at, let me know there. We'll probably end the stream in like 5-10 minutes here. I gotta go, but and now I want to do a quick portfolio update too. So here's someone said SKYT. I've never heard of this one. Sky Water Technology. Super small name here. They're worth $740 million. Now, I saw if you go to the PE right here, the PE ratio is a 5.8. So it says they're trading at 5 times net income. I bet you that's fake. And here's how we could probably tell. So, yeah, it says they made $145 million net income this quarter, which is $2.95 of EPS. That wasn't real. They actually only made $7 million. So, but wow, hey, the sales did spike up 60% year over year, though. There was something that happened. Did they like buy a business? So I think they bought a company for like 90 million or something. I don't know. Maybe that's why there was a little funny money adjustment to the net income from the acquisition. So maybe that's acquisition related. Yeah, that's why probably the expectations are so good. So anyway, I really am curious to see what that acquisition is. Holding company. I mean, maybe we can view their website for fun here. I don't know. Yeah. Okay. Interesting. I don't know. Small market cap, not really blowing me away. They're 700 mil market cap. Hmm. What were the expectations again? Oh yeah, they're actually decent. I don't know. I don't know. Hey, what up, Gary? What up, J4? Said ORLY. Yo, O'Reilly is a massive buyback play. You wouldn't believe this, This is what's led to this crazy stock price appreciation. The business is also like recession resistant, recession resilient. Like if you got to get your oil changed or your battery's dead or your hole in your tire, like even you got to get that fixed right away, even in a recession. So the fair multiple, 35 times PE. But this company has a rule where they're so shareholder friendly that they return like 50% of all their net income to the shareholder via buybacks. So check this out. They're making like 700 million net income a quarter. The growth rate, if you look, the growth rate is like single digits. Normally for a single digit growth stock and net income like this, like should not have this stock price appreciation, but it's because of the buybacks and the industry. But if we go down here at the top, they literally spend $400 to $500 million every quarter, just for eternity, every quarter, no matter what, for years. This is back to 2020 even. This 500 mil a quarter. They use for all of eternity. And the share buybacks that they've done from years ago, like they bought back 2 bill this year, 2 bill, 2 bill, 2 bill, are so accretive to right now stock price. And so forward PE is a 31, super fair for O'Reilly and AutoZone as well. So yeah, and if they instead, how they're doing 500 million buybacks a quarter, if they chose to do it with a dividend, you'd get around a 4. They could pay a 4% dividend, but instead they choose to do the right thing and basically jack up the stock price by just buying back their own stock instead of ever paying dividends. So there's your O'Reilly. Same with AutoZone. AutoZone looks pretty similar and does the same thing. Yeah, hey Jimbo, what up, Afiel? Let's look at Clear Secure real quick. This is the company. Like, if you've ever been to an airport, you can like biometric scan your face and you can skip the whole lines and stuff, which is pretty cool. They traded a fair multiple, 20 times PE. We go to here's what I like about them. They're just a nice growing company. Again, as much as I love Clear Secure, wouldn't really have them as a huge position. For me, it's a $500 position. And I'm up 52% on them. So I originally put in a lot less into that company because I don't think it's worth having as a major size position, but I do think it's worth looking into because they print net income. Actually, this was a record profitable quarter. Their operating profit was 52 million, 45. It was 45 million of after-tax net income. So they made 45 mil of after-tax net income. And check this out. They pay a dividend. The dividend only costs 16 million. And if you're wondering, why does it say 42 million that one quarter? That's because they did a special dividend. They actually frequently do these special dividends because they have so much leftover cash. They're no debt. And they're also doing a little bit of share buybacks too. So that's what I like about Clear Secure. The forward PE is a 28. So looks like, yeah, so that makes sense. So if we go to the EPS right here, it says they made $1 this one quarter. It says their net income was 116 million. It wasn't actually, it was only 34 million. So that is artificially making their PE ratio look low. So they're really trading at 28 times next year's numbers, but they have a nice yield and interesting like industry, like no competition for them unless it's literally the government. So federally regulated, these airports, no one else is really can get in there. So they're in a unique spot. Hey Mansa, give me a ticker symbol. I'm not sure what you're looking or what stock you're talking about there. Hmm. Hey, Elo said thoughts on Nebius and SoFi. Let's go to Nebius real quick. So if we go to Nebius, that's actually owned by NVIDIA. We go to the NVIDIA portfolio right here. They own, CoreWeave, APLD, and one of the stocks they own is Nebius. Wow. Oh, the market closed. I forgot we got to go look at our portfolio. I didn't realize the market closed. We forgot to do that. But yeah, Nebius, this one is basically a company that owns a bunch of data centers and GPUs, and they've converted into cloud like data center hosting. So we're basically $17 billion of the Microsoft Azure cloud is now going to be on Nebius's data centers. In the long run, they are kind of the bag holder, but they have incredible growth. I wouldn't have this as a big size position, but check this out. The revenue's up to 140 million, up 4x year over year. Just a record quarter. Every year it hits a new record, but it was 146 million this quarter. check out what analysts are expecting in just 2 quarters. 469 million. Incredible growth. They are still expected to lose like 100 mil, but they're only supposed to lose 66 mil in 2 quarters. So they're supposed to grow the revenue, narrow the losses, which is good. But I wouldn't have it as a crazy size position yet. Or I'd keep it so careful right now because I don't know how I feel yet about all these like data center, cloud, like CoreWeave, Iris Energy stocks right now. Is that this what's this app? Yeah, hey, by the way, this is actually a brokerage right here. Yeah, if you want looking to buy stocks on. Actually, all these are brokerages where you buy stocks on. They're all in the link tree in my bio if you want to get any of them. But let me give you a quick portfolio update because the market did just close. Today we are we closed at an intraday low. So RIP, let me check the SPY real quick. Yeah, look at that. The SPY had a little dip down at the end of the day. They're not great. Apple right now, look at Apple. They're kind of being rewarded for not spending on AI. So here's our main portfolio. This is known as our dividend only account where every stock in here pays a dividend. But as you can see, most of these are like dividend growth companies. Here's our total percent change on every stock. Luckily, we're green on every stock except Carlisle. We are down on them. But here's our Roth IRA. We bought a new stock today for the first time ever. We bought CVCO, my newest position. I really love that name. And actually, go watch the very, very beginning of my YouTube stream. By the way, best way to support me is just subscribe to my YouTube channel. It's called Nathan Roberts, also in the link tree in my bio. But I go into major whole depth on why I love Cavco. They make these affordable manufactured homes that look great. They have zero debt at all, huge backlog of orders. They're at 20,000 homes sold at an average net revenue of $99,000 per house. It's their solution to the housing shortage right now. Lower price point, no land cost or risk, no speculation there. So they're a pretty cool company. And massive buybacks, bro. They buy back like 3 to 5% of all the shares every quarter. So yeah, anyway, here's our Moomoo portfolio. This is known as our buy and never sell account, where once I buy a stock in here, I try and legit never sell it. And these are all the stocks that I've chosen in here. Amazon, Coca-Cola Consolidated, Amphenol, Ferrari. I love all these names. And then finally, we have our Weeble portfolio. It's like our risk on account. It's not done too well. We're only up 14% all the time. Let's see how that did today. Yeah, Dave fell 6, Robinhood 4, SoFi's down 2.5. So yeah, some losers, but we do have a bit of winners here like UiPath, Disney. Oh, Reddit's pretty green. That's surprising. Reddit's having a nice day. Nice. All right. What do you think about Uniform on your stocks on platform? No, hey, that you're I don't know about that, Ricky. Yeah, I do really like Far stock. But anyway, I hope you guys, what was that house stock? Hey, that was ticker symbol CVCO. I bought 3 shares of them today, and I'm about to make a whole YouTube video about them. But if you want to see, I spent like 5 minutes of the very, very beginning of the stream. The first 5 minutes of the whole stream is me deep diving into Cavco. If you want to see the very best things I love about this, I bought them today, and the stock hit an all-time high today. I didn't mind it. 21 forward PE, no debt. When you do an X cash PE multiple, when add in the inventories and the backlog, like, they're cheap, I think, and they're only up. How much are they up on the year? They're only up 13% on the year, so I decided to buy the dip on them. We're down on them. We bought them today. We're down 1% on them. I don't mind. I'll eventually probably buy a little bit more. But anyway, hope you guys have a great rest of your day. Make sure to hit the follow button and subscribe if you're new. Watch out for people impersonating me. I literally sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you, nothing like that. I do have a Discord, but I don't ever talk about it because it's in the link tree in my bio if you wanted to join it. But yeah, okay. Have a great rest of your day. Thank you to everyone on the YouTube stream. Yo, if you haven't hit the like button already, please do. It really does help me out. We'll be back. We'll probably be live